Hey everybody, Jimmy here. Welcome back to the channel. So today I want to present to you a simple stock scalping strategy that I use fairly often, and I just used it yesterday, and that was the impetus for this video. So I want to dive into that example, but I want to give you sort of the ins and outs of scalping as I see them. There's a lot of different ways to scalp stocks. Some are more high risk, some are very low risk, some are somewhere in the middle. So you can kind of find what works best for you, but I want to present to you what I use and how I use it, and then you can decide if you like it and want to use it. So let's jump into this. So if you're new to stock scalping, you might be saying to yourself, Jimmy, I don't really know what stock scalping is. Explain just real quick. So for those of you who don't know, stock scalping is typically when you enter at some point during the day, you buy a stock or you short a stock, and then within a short period of time, usually within that same trading day, you take the position off for either a small loss or whatever size winner you're looking for. Now, for me personally, I like to look for stocks that are pushing really hard in one direction, or they're crashing really hard to the downside during the day. I wait for that extreme movement, and what happens in my head, I think of it as sort of like a rubber band. When I see a stock that's pushing up really, really hard, and it seems overdone, it seems ridiculous, it seems extended, it just doesn't seem to fit the picture. And in a minute, I'm gonna actually show you a visual so you understand kind of what I'm talking about. But once that happens, I look to take the other side of that trade. Some people call this or refer to this as fading. You can fade a move, which just means that if a stock is moving up, you jump in to ride it back down. If a stock's pushing down, you jump in to ride it back up. Because typically stocks don't make an extreme move during the day and then finish right at the top or finish right at the bottom. They usually can drive hard in one direction and then they'll soften a little bit. They won't exactly close right where they went to the extreme. And that is the key to scalping. It's to take that trade when you see it very extreme, overdone, and then let it soften and jump out. Before we get into some specifics, I do want to share with you some of the pitfalls involved with scalping. A couple quick pitfalls are, number one, if you get too big, you're gonna kill your account. You're gonna blow up your account. Some people jump into scalp and they're looking to make thousands and thousands of dollars in one trade, and that's just not a good idea. You wanna keep your size very, very small, and I'm gonna show you an example of the size that I use, but whatever size you typically take when you buy stock, I typically say to start by cutting that amount in half. So if you're used to buying 100 shares of Uber with that amount of money, I would say go half that size and use that as your scalping size. Now, number two, one of the pitfalls or pain points of scalping is once you lose, typically the trade's over, especially if you're trying to get out by the end of the day. Now, I have a workaround for this that I'm gonna share with you later that if it does go against you, I have a different way that I like to play it, and it involves options. Don't panic. I'm gonna talk about it here in just a little bit. On the brighter side, scalping has some upsides, some positive points. I'm gonna give you two of them right now. The first positive point of scalping is that it's quick cash. You jump in, hopefully by the end of the day you jump out, and hopefully you have, a couple $100 profit. It's not gonna make you rich overnight, but it's adding to that account size, and if you can consistently develop a technique, this can add to your profits throughout the trading year. And number two, which a lot of people really like, is no overnight exposure to the markets. So if you jump in intraday and you see an extreme, say a stock pushes up, you jump in short, you ride it back down, you jump out, and then in the after hours market, the stock crashes, you had no exposure. The after hours and pre-market trading won't involve you because you're in and out before the end of the day. Now, one question I get a lot is, Jimmy, what stocks should I scalp? Are there certain stocks that are off limits and others that are on your watch list? And I will share with you guys my preference. Now, I avoid all penny stocks. Now, some people don't agree with this. And if you like penny stocks, then by all means stick with penny stocks. But for me personally, I avoid any stock or any company that doesn't really seem like it might be a company. I like to play with the large cap stocks. I like to play with the AMDs, the Facebooks, the Ultas. I like to play with Micron. I like to get in some of the stocks that are larger cap that I can get in and out of because they're very liquid, meaning there are a lot of shares open to be traded, so I won't get stuck in a position. And I want the markets to be really tight. I want to just be a few pennies wide on the bid-ask spread. So if I jump in, I want to be able to sell that stock without taking a loss because the spread is too big. That's a problem. Now, in addition to this, one thing I like to do is I like to scalp stocks that I already have positions in. So the example I'm going to show you guys here in just a second is in Facebook. Facebook, I've been accumulating a position on over the past probably 8 months. And what I do is every time Facebook is down, I'll buy a few shares. In some of my previous videos, you've heard me say the word nibble. I like to nibble shares on down moves. This helps add to my position and helps me to grow my size without buying too high. If it pulls back, I can buy. If it goes lower, I can buy more because I'm bullish long term on this stock. Now, let's say that Facebook, I've been accumulating a position, and then one day it has a big grizzly pullback, way bigger than any other pullbacks it's had in the last few months. I might say in my head, hey, I'm thinking about rubber bands. I'm thinking about a stretch to the downward side, and it's got to come back hopefully by the end of the day. So when I see that over-exaggerated down move, I'll jump in and buy a few shares and then wait. I'll set my alerts in Thinkorswim and wait for it to creep back up. Then if it creeps back up and I can get a few points to the upside out of it, a lot of times I'll just take the trade off and I'll just take the quick profit. You can also hold and say, wow, I just got a really good entry, so I'm going to hold longer term because I like this stock. That's another option. The third option, you jump in and it continues lower. And now you're saying, oh, this didn't work. What do I do now? I've got something for you as well. So with this, let's jump into the charts. I want to show you Facebook's chart and show you an exact example of a scalp trade I took yesterday that looked pretty good going into today's open. So let's jump into the charts. Okay, so I've got Facebook up on the daily chart here. And what I want to show you guys specifically is I want you to focus in on this big red candle right here. So what happened yesterday was Facebook opened up and it decided to push to the downside. It pushed down really, really hard, and it got down as low as 168.34. You can see if you watch this low right up here when I hover this candle, 168.34, pretty big down move. So what I did was when I saw that, imagine this candle, let me zoom in a little bit. Imagine this candle were filled out all the way down here. That's a pretty big red candle if you compare it to this one, and you keep going back and you keep looking at all the red candles that you've seen recently. That's a pretty sizable candle. So what I said to myself was, we're getting a stretch to the downside. This is a pullback move on a stock that I really like. So I'm going to go ahead and take some shares and see if I can ride it to the upside. So what I did was I went ahead and I bought 50 shares of Facebook at $170 a share. So I was in at 170, which is right about where my cursor is, right in here. Then I watched it and it crept back up and it moved around and it was just sort of up a couple bucks, and I thought, okay, great, I can add this to my shares. It's going to reduce my cost basis. There were some positives to it. And then if I open up the after hours market, I entered at 170, which is right in about, we'll call it right about here. Now it traded up and I was happy about that. Then after hours hit, and look at this, we got a big move to the upside, and today it's continued up. So I held it into the close because I said it's up a little bit, but I'd like to see if it could go a little more. So this turned into an overnight trade for me. You didn't have to do that. You could have looked at where this one closed. It closed at, well, it actually closed at 170.80, but it was actually up more than that and then came back down. So I could have taken 2 points out of this yesterday, which would have been fine, but I chose to hold it overnight, and it gapped up, and now look where we are. We're at 184, a little over 184. So In less than 1 day on Facebook, I've picked up a 14-point scalp that worked beautifully. Now, it was solely based on how extreme this candle was. This candle was all the way down at this pink line, and that was just an overstretched rubber band. I jumped in with small share size and then rode it back up. So that's my scalping strategy. It's using a stock that I'm already interested in, or maybe even already have a position in, adding a small number of shares at an extreme end, whether that's up or down, and then looking to ride that into the end of the day. I'm going to show you one more example that's pretty interesting. There's a stock called Zscaler, and I want to show you Zscaler. So look at this day right here, 4/16. It has this green day, another massive green day all the way up to the top of this pin bar at 73.53. Now, that extreme movement, you could say, you know what? I think that's an extreme movement. It's very overdone. I'm going to go short Zscaler and see if I can get a few points. So from 73.50, it then ended up closing at 70.37. So you could have made over 3 points on this drop and then closed it by the end of the day. So it's all about looking for those extreme movements, and you don't always get a huge move back to the other direction, but a lot of times you'll get some kind of softening. It's pretty rare to see one have a massive up day and then have no pullback. Something like this isn't super common. See how that pushed all the way up and then barely sagged back down and closed? That's not as common. Now, you can set your stop loss in place so that if it doesn't work out, you can exit the trade. One thing I mentioned in the intro is that what if this didn't work? So if you go back to Facebook, what if it didn't work? What if I got in and then the next day we just went lower? In my scenario, what I do is I like to take those shares and I like to hold them and then accumulate shares up to 100. And once I have 100 shares, I put on what is known as a covered call. That's an options trade. And if you check out this video right now, you'll learn about what a covered call is, and it'll help you understand how to use 100 share size to put on a position that basically pays you just to hold the shares. So I'd highly recommend to check out that video on options on covered calls, then come back, finish this video up, and you'll have a better understanding of what exactly I like to do when something goes against me. I like to average down if I'm bullish on the stock. Now, if this were a stock that I didn't like, then I definitely wouldn't keep holding it. I would stop myself out. I would just get out. But if I like the stock and I'm looking to buy shares lower, then I'm okay holding it if it goes against me. And that's why I really like this scalping strategy on stocks that I'm trying to accumulate a position in, because then you're okay with holding shares if they go down a little bit, because your plan is for it to go down so you can continue to add to your position size because you're bullish long term. So I hope this scalping video was super helpful. I want you to post in the comments, yes, you've scalped in the past, or no, I've never scalped in the past. Really quick right now, just jump down in the comments, say yes or no, and let me know if you've scalped before like this, or no, you haven't. And we'll see you next time.